All right, folks, right now we're going to talk to our man, Shawn Edwards. Shawn is Vice President, Institutional ETF Strategist with Direxion, and we're going to talk some markets. And I love that we do this on Wednesdays because sometimes it falls on Fed Day. We get some volatility. Shawn Edwards, good afternoon.
Yes. Thanks, Tom. Thanks for having me once again. Happy to be here, and it does seem that Wednesdays bring volatility, so happy to have this conversation with you today.
As traders, and whether it's leveraged ETFs, but boy, we got some action in this market, Shawn, and I know, we were talking earlier in the week about stuff coming up, and boy, if we could kick it off with the Fed, we got rates right now. I'm not sure if the chairman's still talking, but he was close. He may be. And the market reacting, but yields in focus, man. I know you guys have some great ETFs, but what are you seeing maybe from some of the investors, some of the ETFs that you guys have for those investors out there looking for whether it's yield-sensitive equities in this market, small caps in general. Small caps actually up 14 points to Russell today as the market's jumping around. What are you seeing over there, Shawn?
Right, no, definitely. And we typically approach it and we introduced our fixed income suite, Tom, but I'm going to take a different approach because we have some other ETFs for traders that are looking to trade the swings within yields, right? So again, we know that the Fed decided to keep rates steady just due to persistent inflation, tariff uncertainty, and the robust labor market, right? They mentioned that it's possible 2 additional rate cuts on the table for 2025. So for those traders that are looking to trade around rate changes, you can look at growth in tech stocks as they're sensitive to yield changes and they present trading opportunities. And again, Direxion, we provide tools for traders who are tactical that want to take advantage of short-term price swings. So as we know, when yields fall, tech and growth stocks tend to surge. And when the Fed turns hawkish, tech and growth stocks tend to retreat. So a few trading opportunities that I mentioned a little bit earlier. For those traders that want trading opportunities around tech and growth stocks, you can look at the Direxion Daily Technology Bull and Bear 3X ETFs. Those funds provide 3X daily exposure to the Technology Select Sector Index. So again, if you're bullish, you can look at ticker symbol TECL. If you're bearish, you can look at ticker symbol TECS. Again, tactical short-term trading tools not meant to be buy and hold investment vehicles. These are trading tools. So again, if you're looking to trade the yield changes and the Fed and interest rates, you can look at TCL and TCS. And as you mentioned a little bit earlier, Tom, the Russell 2000. If you're looking for growth names within an index, you can look at the Russell 2000. Again, small cap index. You can get exposure to that index, 3X exposure to the daily performance of that index by utilizing the Direxion Daily Small Cap Bull and Bear 3X ETFs. Again, those ticker symbols are TNA if you're bullish, and if you're bearish, you can look at ticker symbol TZA. So again, trading opportunities around tech and growth as it relates to the rate policy and yield changes.
And pretty cool. I was jumping through those as you were talking about it, and of course the TNA, man, today, and the Russell's leading the way right now. TNA is up 2.3%. That's because the Russell right now is up a solid 0.8%. When you got the S&Ps, Nasdaq, all of them barely in the green, but barely, somewhat. Let's talk a little bit of crude. I know you guys got some great ETFs for crude, and boy, you talk about volatility. We'll see how tensions, hoping for the best, of course, always, but boy, those tensions, man, I'm seeing headlines every day. Crude catching a little bit of a spike. Let's talk a little bit of crude if we can.
No, for sure. And as you mentioned, OPEC decisions, geopolitical tensions in the Middle East between oil-rich nations, and just changing demand are driving oil short-term price moves. So as we know, energy stocks tend to respond rapidly to swings in crude oil prices. And so with this conflict, we're seeing a disruption in production. So what does that mean for traders? There are trading opportunities for oil and gas related equities in the broader energy sector. As we all know, Direxion, we're not providing direct exposure to crude oil, but we are providing exposure to oil and gas related equities. So I think a lot of the viewers on the show, Tom, are already familiar with ticker symbol GUSH and DRIP. So GUSH and DRIP provide 2x daily exposure to the S&P Oil and Gas Exploration and Production Select Industry Index. So for those traders that are looking for opportunities around oil and gas related equities, you can look at GUSH and DRIP. And then just to broaden out the suite, for those traders that are looking to trade energy broadly, you can look at the Direxion Daily Energy Bull and Bear 2X ETFs. That's providing exposure to the Energy Select Sector Index. The ticker symbols there are ERX and ERY. If you're bullish, the energy sector, you would look at trading ERX. If you're bearish, you would look at trading ticker symbol ERY.
And those are some, I mean, man, this crude market, $73, I think, and just as you were coming on the air, Shawn, I mean, we have some spikes, man, almost hitting 74, just at 310. I got my chart up here on a 5-minute basis, folks. You trade from 74 to 72.20. A lot of headline-driven news, of course, in that market going on with some volatility. And then, let's talk the general market, man, because, I know SPXL, SPXX, outstanding ETFs. I trade them all the time myself for the general market. But at an S&P at 6,050, we're seeing a lot of investors looking for a little bit of whether it's, safety, whether it's growth. But talk to me about rotations and the ETFs that you're seeing with some action out there with this type of market as well.
No, absolutely. As I always love to say, volatility presents opportunities, and 2025 hasn't been short of opportunities led by the volatility. So what we're seeing right now is a market rotating between growth and then defensive sectors due to some of the reasons we're talking about now. So when we see strong economic data, it often triggers a risk-on rally, which then prompts, if there is weak data, prompts a shift to safety. So, for example, we've talked AI before on your show. We've talked growth stocks. And now we're seeing defensive sector take the spotlight. So if you are looking to trade the broader market moves, you can look at ticker symbol SPXL, as you mentioned a little bit earlier, which provides you 3x daily exposure to the S&P 500 index. If you're looking to be bearish, you can trade ticker symbol SPXS. Again, 3x inverse exposure to the daily performance of the S&P 500 index. So again, broad market exposure. If you're bullish, you look at SPXL. If you're bearish, you would look at SPXS. And as I mentioned a little bit earlier, if you're looking for defensive sector opportunities, so those sectors that you could stand to benefit from, if in fact there is a rotation once again out of growth. You can look at, again, the healthcare sector or utilities. So a few tickers that we typically don't talk about on the show, but wanted to highlight. One in particular is Cure. That provides you exposure to the Healthcare Select Sector Index. Daily 3x bull exposure to the Healthcare Select Sector Index. And then also UTSL, which provides you 3x daily exposure to the Utility Select Sector Index. Again, tactical short-term trading tools. Just always love to introduce the many different tools that we have available for traders to take advantage of the volatility that's present in the market.
Man, I appreciate it. Cure. I like that one, especially in this environment, man. We look forward to talking to you next month. Shawn, thanks so much. Have a great one.
You too, Tom. Have a good one.
Thanks so much.